people, it's me Kumaitila Kositile, your money manager. If you are an aspiring homeowner and you are looking to finance the acquisition of your home through a bank loan, this video is for you. So in today's video, I just want to share with you a predicament that we found ourselves in with one of my coaching clients. I call this condition being sandwiched between a mortgage and a personal loan, and I'm going to share with you all the steps leading up to this condition. First things first, we need to understand this very important ratio when it comes to mortgages. It is called loan to value ratio, abbreviated as LTV. So if you go and look for a mortgage loan, they are going to tell you about LTV. So what is LTV? So LTV is a ratio that measures the amount of debt relative or in relation to the appraised open market value of the property. This is how much the lender is willing to advance you against the open market value of the property. And we need to understand that different lenders have got different LTVs in different locations. What is very important for you to understand is that in cities like Gaborone, where we are, the LTV for most commercial banks is 100%, or even some, they'll go up to 105%. So what it essentially means is that most commercial banks are willing to finance up to 100% of the appraised open market value of the property in the cities. Why is that so? It is so because the economic activities of the country are concentrated in the cities, therefore there is buying power in the cities. Remember, commercial banks or lenders are in the business of selling risk. So when they sell this risk, they look at all the risk factors that they are going to face, and they try to come up with measures of mitigating those risks. So one of the risks that the bank or the lenders are facing when they issue you or when they advance you a loan is what is called default risk. And to manage this default risk, banks do have this condition or this ratio that they use that they call loan to value. So for them is, if you are to default on paying your loan, they are going to repossess the loan. And what is the probability of them selling this repossessed property when you default? So it's really very high in cities because there is buying power in the cities. But you need to understand that the further you move away from the cities, the LTV will be lower. So the further you move away from the cities, banks or lenders are willing not to finance you up to 100% of their value. This is a predicament that you are going to face as a property owner if you are looking to acquire a property in areas that are far away from the cities. A case in point here is Mau. In Mau, the LTV by most commercial banks or lenders is 70%. So somebody who is looking to acquire a property in Mau, this is the condition that they are going to face. The banks or the lenders are only going to give them 70% of the open market value. It means that there is 30% that is remaining that they will have to finance. And the question is, where do you get the 30% financing? This is what is going to lead to this situation that we are discussing that I call being sandwiched between a mortgage and a personal loan. In most cases, what will happen is you will get the 70% and then you are going to default into a personal loan to finance the 30%. So now you're going to find yourself in a situation whereby you have financed your home with both a mortgage and a personal loan. I am not talking textbook stuff. I am talking things that are happening in reality. This is a condition or a situation that we faced with one of my coaching clients, wherein she was looking to acquire a home and she had to finance the home with both a personal loan and a mortgage. 70% mortgage and 70% mortgage and 30% personal loan. And sometimes this is quite a stretch because now you have two loans that are running concurrently, and maybe you were not even aware that you are going to face this situation, but you don't want to let this property go. You really want to get it. So If you are looking to acquire a property in areas that are far from the cities, this is what you need to do. You need to prepare. You need to prepare. The first thing that you need to do is you need to determine the location. Where do you want to acquire your home? This is your location. And if your location is further away from the cities, this is what you need to know. You need to engage lenders and try to find out their LTV in the location that you want to acquire your property. If the LTV is 30% or 80%, it means that 20% or 30% of the home acquisition is going to come from you. So you have to prepare. The third thing that you have to do is, once you know the LTV is, start saving up for that 30%, for that shortfall, so that you don't find yourself in a situation whereby you are sandwiched between a mortgage and a personal loan to finance your home. So this is really what you need to do. And also, as another way of trying to work around this, is look for properties that are underpriced. Properties that are underpriced, these are properties that are selling below their appraised open market value, because your financier is going to look at the open market value in most cases, and you stand a chance maybe to get the entire financing through a mortgage, because the property that you are getting is priced below the open market value. This is all that I wanted to share with you today. Please don't forget to leave a like for me and a comment for me, and thank you very much for watching. I will see you in another video.